All right. Well, I'm excited to start tonight. Have a special guest for everyone tonight. His name's Pascal St. Pascal and I have known each other for about 3 years now. We met when Pascal started to talk to me about TEC. And certainly, I'd like you to maybe give a little bit of details and information about that. But I've had a lot of interaction with coaches or consultants or people that other business people that I've shared ideas with over the years. But the unique challenge with someone type A like myself and like Pascal is that it's hard to connect with somebody. It's hard to believe that what they're saying, what they're doing. I got a lot of people in my life that want to tell me that I'm either really great or they really hate me. And there's not many people in the middle that can kind of walk that line where you can say, this is what I think. This is how I think you should execute. And Pascal has always done that and been a good mentor and a good leader in my life. And he's an amazing, accomplished entrepreneur. He's a serial entrepreneur. If you go and look at Pascal's LinkedIn profile, it's as long as any I've seen. Um, Many awards, successes, 40 under 40, and lots of things that he's had history with. Pascal and I connected a couple of weeks ago just to check in about where he was on this crypto Bitcoin journey. And Pascal told me he was a cryptographer before it was cool. Pascal, maybe you can tell me a little bit and tell the audience a little bit about yourself, maybe a little bit about your history, and
Sure.
certainly why we've decided to have a chat tonight.
Sure, absolutely. Well, thanks for having me on. I always love talking about business, but especially talking about investments and, of course, crypto. So if we go way, way back, so my background is in computer engineering. So I grew up in the internet was starting to boom, and basically Ottawa was known as Silicon Valley North. So those were like the crazy days where you heard ideas of people getting tens of millions of dollars of VC money with a napkin idea, right? So that's where we were in that time.
Yeah,
So basically, I loved business, but
yeah,
I also loved innovation and technology. Like that's where my heart was. So I wanted to meld the two, and so I went into engineering, and basically at that point in time, two things really stood out for me was distributed systems, which back then was I could talk about my days. I did some co-ops at StatScan and helped them build some decentralized stuff that helped them to model. In other words, we used the computers on all the floors to help them build models on taking past census information,
yeah,
use all that information to predict future trends in the population. And back then, the computing power wasn't strong enough. There was no Amazon AWS. So basically, we wrote
yeah.
software that at night, when people would leave from work, all the floors with computers would start running and create a supercomputer. That was
Okay.
22 years ago, right? So that my passion was in that because I saw the power of computing and of course the
Yeah.
internet from that perspective. So that was my background.
Yes.
But business was always where I wanted to go, and most of my ventures, some would say, have always been a little too early into the market. So I tend to be
Okay.
very early into the market, and even
Yes.
today when I consult with folks, I always say, I give them, share my experience. I'm like, you got to make it long enough for
Yes.
policy and the mass to catch up to your vision. Because when you work with entrepreneurs, a lot of us have that, they see things ahead of things, right?
Right. Right.
So that's way back. My engineering background, we could talk about business. I've had multiple
Yes.
businesses in IT, exited two of them. And basically, how we met is basically throughout my journey. I say I went from an engineer to a CEO to a leader through coaching and through peer groups.
Yeah.
So when I first started business, I thought we needed more features, more buttons. Like if we add an extra button, it will sell more, right? That's the engineering mindset,
Yes.
thinking more and more
Yes.
stuff, right?
Yes.
But then you start talking to others, and basically you realize that you need to be more strategic. You need to be able to lead people. And I got really lucky in my life. So I had a virtual CFO that joined us because we had raised capital. I was coming out of university, raised over $1 million, recruited a team of friends, and said, let's get into business, into early digital photography on the commercial front. So we were quite early in that space back when the first DSLR first came out. I won't go into the details of that business, but it was a lot
Sure.
of fun.
Yeah.
We brought in an adult in the room to help supervise the cash and help us
Uh,
understand the back end of the business. And he had
yeah.
worked with Corel and many other large businesses, and now he wanted to work with startups. So back then, I knew nothing about finance. I was all about engineering and all about sales. At the
Yes.
same time, I was alone. Like I had recruited my friends. That was my HR strategy.
Yeah.
And and my mentors were the investors. So all of a sudden, like they want to share with you their insights, but at the same time, you're not going to talk to them about your insecurities, what the things you don't know, or because you're managing their money. So
Right.
he was the only person that I could talk to. And
Mhm.
I got really lucky because when you find a mentor like that, some people will listen to me and do everything I say. And
Right.
then sometimes you get lucky and you find someone who's very humble. And I got lucky and I found someone who was very humble. And he told me, said, basically, I love that we're having our coffee morning, every Friday morning coffee. And I
Yeah.
love that you're leaning on me for help and support. But I
Yeah.
want you to surround yourself with more than just me. I want you to start getting into building a board of advisors and talking to other entrepreneurs and find different opinions, get challenged. And he
Yeah.
introduced me to peer groups. And that's how
Okay.
I became into that world. Been a member since then, got a
Yeah.
coach early on in my career.
Yeah.
So after my last exit, I wanted to move into giving back to the community by working with entrepreneurs through various means.
Yeah.
And PEC was one of those. In other words, giving back to the peer group community,
Yeah.
coaching community, because I'm a huge believer in the
Yeah.
power of peers,
Yeah.
which all my ventures are collaborative. So we'll talk
Yeah.
about the other ones later, but it's
Sure.
always about
Yeah.
working as a group.
Yeah. I mean, you must have seen some amazing businesses over the years.
Absolutely, absolutely.
Yeah.
Both in them and
Yeah.
as you're in the startup ecosystem, crazy
Yeah.
ideas. I remember being on a panel in 2005. We didn't grow as big, but we were like the two hot startups, and it was me and Toby from Shopify, and they were just talking about
Yeah.
how they their snowboard shop and how they created this new e-com. Like we were talking like they were starting to code Shopify.
Okay. Okay.
So yeah,
Yeah.
now I'm
Yeah.
a happy investor. He's made me a lot of money. So yeah,
Yeah. Yeah. He's done all right for himself.
exactly. Yeah.
Yeah, that's interesting. Yeah, I mean, obviously, I think Shopify would and could play an interesting part on how DeFi evolves as well. So certainly, I'd maybe we can have a chat about that as we move along
For
here.
sure. For
Yeah.
sure.
But what we're here to talk about tonight, though, more specifically, is going to be crypto and Bitcoin.
Yeah.
I know you've spent a lot of time in there, a lot of time in that space, and we've talked a little bit about my views on it and how I see it, and I see it from a pretty narrow perspective, probably relative to you.
Hmm.
Like I look at it as this is a good investment opportunity because I look at the world is bubbly wherever you look. There's bubbles in every kind of asset class, and so I look to and say how do I diversify my portfolio? How do I put something in there that looks different, acts different, and maybe prepares a bit differently to some of the other asset classes, where you'd take a more holistic view. And I'm hoping we can dive into that. And
Absolutely.
so, as I speak to clients each week, last week at my weekly roundup where I do weekly with clients, that one of the big questions was, almost like, can you write a white paper on what Bitcoin is? Like, describe it to me. And so I'm hoping we can demystify some of those things today. And I'd like to walk through kind of all the way from some soup to nuts if we can.
Yes.
And maybe you can give me, like, maybe this is the wrong starting point but for me, the right starting point is maybe you can describe blockchain. Do you think that's a good place to start, or should we start somewhere else?
Well, I think there's a lot of place to start, but I wanted to before we pick a starting point on Bitcoin, I want to say that I came to it the same way you did. So it's not my engineering roots; it's actually my macro investing roots. So
Okay.
to take a step back, why I actually came into investing is after my first exit and trying to you start managing your own funds
Sure.
and I really technical analysis and fundamental analysis, but really macro, right?
Yep.
As an
Yep.
entrepreneur,
Yep.
able to see trends follow was really a passion of mine, the top-down approach to investing. So
Yep.
I was aware of Bitcoin. Some would say I'm late to the party. So I've been aware of Bitcoin since its first started because I was in the open source space. During that time, after selling my first business and jumping into open source, which was again back then underground. And
Yep.
I'm bringing this up because I think it's important for people to know
Mm,
where Bitcoin is because they're going to ask
yeah.
like who owns it, where did it start. So we need to understand the layers of roots. So the internet comes out, right?
Yeah. Yeah.
And after that, from a coding perspective, most of these major innovations start from a grassroots approach. usually libertarian perspectives, as in things
Sure.
should be free, things should be open,
Yes.
everyone should have access. And then after a while, it gets commercialized and a lot of money gets made, and a lot of people could win. So I came from a closed source world. So my first VC backed business was, what's your IP? How are you going to protect your IP? My second business, I was totally mystified by the world of open source, and I wanted to learn more about that. So it became an open source company.
Yep.
And back then, VCs didn't know how to interpret that, because back then it was, I invest, you protect your IP, and we have a deal, right? So it's very early on, but about at the same time, Bitcoin in 2009, when the first block got mined. Now, when we go from there to,
just before we jump on, open source is like cloud.
Open source is free community software. So the code, the Bitcoin code, is not owned by anyone, which is different than other projects, which when we talk about crypto, there's difference. So we don't know who created Bitcoin. It's an open source. It's managed by an open source community.
Yes.
And the projects that we used in our company were also open source. The founder of one of the projects that we were using from a software perspective was no longer involved. Okay. On an R&D perspective, we got extremely involved because we wanted to give back, but it also made a lot of financial sense for us to say, because I go back, my first business required $1 million of CapEx just to get going. Okay. Just to build infrastructure. With open source, my second business, all of that was available, and I was able to innovate on top of it.
Gotcha.
So I want people to understand that, because when we talk about some of the things later on in Bitcoin, of people are saying, well, it's never going to grow because of this, because of that. We need to understand how layers get built. And I want people to understand where Bitcoin is in that layer. So open source is free software or open code software.
Gotcha.
Okay. Now, there's ways of how it's monitored and protected. There's a team that protects the core, and that software can't get deployed without all the miners agreeing to it. So in other words, is a lot of consensus in Bitcoin. So there's no one that's going to hack the code. Right. There's no one that's going to make a change that's not approved by not only the community of coders, but also the miners. So it's all, and there's also people who have pools. So long story short, it's a bit like a political system where you got, the Congress, the president, exactly, the justices and all that. So it's a check system and check and balance system.
Sure.
That exists in Bitcoin. So that was my world from that perspective. And I tossed Bitcoin aside early on, because again, it was really early on. It was like, underground, I was talking, with various coders in the open source world. I knew about it, but from an investing perspective, I wasn't ready to put my dollars in it. Right.
Sure.
But I followed it. And when I really got interested was after the last cycle, when basically it survived the Bitcoin cash halving. It survived the ICO. It was like not a scam fest, but everyone was initiating an ICO, initial coin offering. There were, the government laws were all mixed up. So now, after all of that infrastructure, the laws, like basically the survival of the fittest, Bitcoin still survived and thrived. Government's regulation became quite clear. Like the people say, we can talk about governments, the regulations are quite clear. And at the same time, the securities versus property, all that's been resolved. And then all of a sudden the macro picture, the 2008, like some would say, the economy died that day, and it's been synthetically maintained ever since, right? And we all live that.
Without a doubt,
yeah. So basically you're seeing, as an investor, I'm tracking that, and we could be talking about money printing and quant easing for years, but now all of a sudden you're seeing, you got to print like $10 to make $1 of GDP, and it's getting worse and worse. And COVID just exploded it all. So basically my world of engineering, of understanding, you analyze the security, you're able to confidently go to your investors saying, that's why we're investing in ABC company, right? For me, Bitcoin is my engineering background allows me to have that securities analysis. I understand how it works. I'm confident and I trust how it works. The macro environment is perfect timing. Regulation and infrastructure, like it's pretty easy to buy it. It's still hard, but it's much easier than 5-6 years ago to get Bitcoin. So all of that together made me go all in.
Okay. Gotcha.
Like I'm all in.
Yeah, that's going to be fun to talk to as we go through this, and I think that's amazing. That's awesome. So let's make sure I understand this. So the Bitcoin, so does the Bitcoin sit on top of the block, or is it the block basically?
Okay.
Like
So
trying to simple it down. And I mean, like obviously you're probably looking at me going like, I don't know
no.
what
That's a
this
great.
guy's talking about, but like I'm just trying to get the base layer because yeah,
So blockchain is, so let's put blockchain aside versus
gotcha.
crypto, right?
Okay.
The blockchain is basically a database structure, right?
Yeah.
That
Yeah.
are basically immovable, unhackable. Okay.
Yep. Yep.
So some would say, what's the difference between this and the bank's digital ledger, right?
Sure.
The
Yeah.
difference is the ledger is closed. The ledger could be hacked,
Gotcha.
and it's centralized.
Gotcha.
So
Yeah.
if the banks have tons of security around that, but
Yeah.
we've heard about like Sony hacks and their databases,
Sure.
and so let's talk about database, whether it's money or not, database, right?
Database. Okay.
So databases are usually centralized and
Yep.
usually very poorly protected. And we've
Gotcha.
seen that with a whole bunch of things in the our information has been hacked from all the providers all the
Sure.
time. It's
Sure.
ridiculous, right? So the
Yeah.
blockchain does a bunch of things. It basically decentralizes where the information is stored.
Yeah.
So the blockchain, so the blockchain database is copied amongst all the different nodes, creating a decentralized, no single point of attack, right?
Yes.
Exactly. The cryptography around it protects it from being hacked from that perspective. So it's half database, half cryptography. Yep. So it's the highest level cryptography right now. Even a supercomputer, there's no supercomputer on Earth that could crack it right now. So it's the highest level of security possible.
Yes.
Decentralized, no central point of attack.
Yeah.
That's the database.
Okay. Got it.
How the database operates, whether it's the amount of blocks and those kind of things, how many are mined, the coin sits inside of that. Right?
Gotcha.
So the 21 million coins available, that's in code. That's in the open source code that was set as a variable when it got launched. Okay. So that's the code dictates the laws of physics of this specific cryptocurrency, right? Blockchain is the database, how it's stored. Okay. And then basically after that, the mining ecosystem is basically the network that makes it all possible.
Okay. Got it. All right. So let's put that blockchain aside. That helps me understand. It's kind of inside of it.
Which is why, so if we take a step back, right, why people are saying blockchain is a big technology, I want people to understand. Let's take, for example, real estate, right? And people would say, why would we put real estate on the blockchain? So, or even cars or things of that nature. I think it's your VIN number as your car was kind of instilled to try to keep track of, well, has it been in an accident and all those kind of things, right? It's still centralized, right? But it was initiated to try to keep a history of the vehicle. From a housing perspective, it's kind of hard. You buy a new house, or let's say an old house, you go to your lawyer, they do a check on it, like, is it all true? Is there a lien against it? Like, all that information centralized, you don't know how to get it. We have no access to that. And even then, is it actually accurate? So imagine having all from the time a house was built, right? The provider, the contractor, to the time it was sold, to this, to that. Imagine putting that on the blockchain where it's all secured proof of work. In other words, unhackable, decentralized, fully auditable. Imagine what it could do to different industries from that perspective. So
it's amazing.
That's a database.
So that could completely change the landscape of many industries and businesses. Obviously, that crushes lawyers and banks and like all these other places that real estate agents and everyone that makes their living from it. Right.
I own the information. Right.
So that's interesting. That's something that's an aside, but that's very interesting, and something that my brain will noodle on as we go on, and maybe we can chat about that as we go. So, but okay, so let's dive in. I guess we'll stick with Bitcoin as much as we can to start with. Obviously, there's other crypto, but Bitcoin would be a good place to go into. So let me start with, obviously this was written in 2008, and Satoshi, I guess whoever that may be, wrote it with the view that the world was getting too controlled by many, and let's find a way to kind of give some power back to the masses.
That's correct. And have you read the Satoshi's white paper?
Sure. I wouldn't interpret it the same way as you, but
but it's a great place for anyone to start to get educated, to understand his vision, right?
Yeah.
And I think if you realize, so the difference between Bitcoin and other chain and other cryptos, they all serve a different purpose.
Yeah.
Bitcoin is trying to replace sound money, right?
Yeah.
And we could
Yeah.
talk about what that
Yeah.
all means, but all the laws of sound money are baked into the Bitcoin code.
Yeah. Okay.
Okay, totally
So
different than Ethereum or others. That's its mission in life, is to become sound money. Versus
yeah.
Ethereum is something totally different. Right?
Yeah.
Both
Yeah.
valuable but different.
Yeah. I might ask you about Ethereum if we got time for
Sure.
that, but let's so this sound money. So what's your definition of sound money?
So basically, from a pure store of value perspective, we're looking at something that is, cannot be. So Bitcoin is deflationary in nature because we can't print more. So there's a finite number. Like if we take like properties of gold, even though we can mine some from
Yeah.
those kind of pumps, it's divisible. So Bitcoin, a lot of people right now are thinking, oh, I missed the boat. It's at 40, whatever, 6K today. It was at
Yeah.
48, whatever the price is. They think I cannot buy a Bitcoin. Bitcoin is divisible by a million, right? The smallest denominator is called a sat. So if you ever
Sat. Okay.
hear,
Yep.
yeah, Satoshi, that's the smallest denominator. So I can literally, so my can of water is actually more expensive than a Satoshi. So you could divide to that level, right? So when you
Yes.
hear people saying we're stacking sats,
Yeah.
means we're just adding Satoshis to our balance sheet because Bitcoins are becoming hard to stack for the average individual. So it's
Sure.
divisible. You could buy $5 a Bitcoin if you wanted. You don't need
Yeah.
50, $48,000 in one swoop to buy it. So it's
Okay.
divisible. Okay.
Yep.
It's fungible, so it can be replaced in value right from that perspective right now. And like I said, it's deflationary in nature, so it's got a hard cap, even harder than gold. Like you cannot reinvent that number, 21 million.
Yeah.
And the way it was created, so it's part cryptography, which is the security of it,
Mhm.
part code, the open source code of, if we were to code sound money in code,
Yeah.
what would it look like? That's the open source code. And then we have to play human dynamics. So how do we play human dynamics of trust, a bit of greed,
Yeah.
right? A bit of all of those things to try to create value from it, right? And that's where the halving comes in. And we could talk about that as well. So those three mechanisms together, secure the blockchain or secure the Bitcoin. The laws, the physical laws of Bitcoin are in code. And then the halving process is basically the human psychology, the human process of it.
Interesting. Okay, so we launch, Bitcoin exists, it's born, and then so a few people start to pay attention to it, and mining starts. Okay,
Yes,
so that's how we start. That's a
so
genesis.
Satoshi had to mine the first block. Yeah, so basically there's no, some coins start with pre-mined, but the whole process of starting a new blockchain is it has to be mined. There's no starting point. We just start mining. So he was the first miner.
So he mines coin. Now we're started. So tell me what mining is. Like explain it to me. Like obviously I understand what traditional mining is, but what's mining within the world of the internet?
And the reason they call it mining is because we're actually mining for new coins. We're also mining transactions. We'll talk about what happens when there's no more Bitcoin to be mined. The transactions overweigh that. So there's actually total Bitcoins to be mined to keep the network safe in payment, right? So it's called mining because they're trying to replicate gold mining from that perspective. We're mining for new stuff, right?
Yes.
So essentially there's two mining systems, proof of work and proof of stake. So Ethereum recently moved to proof of stake, and we can talk about what that means, proof of work. Let's put it this way. So basically, there's a finite amount of blocks to be created. That's in the code, okay?
Yes.
And then basically, to create a decentralized network, right? So Facebook, Google, and Microsoft, they all pay for their own servers. Amazon, they pay for their own servers. It's centralized. They own it. So how do we create a decentralized system that have costs, hydro costs, computing costs, and all that stuff? How do we incentivize people to want to build the network? And by the way, today Bitcoin is the biggest, most powerful network in the world. So that's how powerful. Yeah. So we need to. So how do you incentivize? There needs to be compensation, right? Sure. And we're not. There's no like pay by Visa Bitcoin. It's not like pay a Visa, mine a Bitcoin here. This is literally incentivization. So Bitcoin itself is being incentivized. So the miner basically mines gold, finds gold, could choose to keep gold on their balance sheet or sell the gold.
Yeah.
Same thing with this mining. So
Yeah.
proof of work, all you need to understand is that it's having to solve a very complicated algorithm,
Yeah.
right? To
Yeah.
prove that the block has been analyzed.
Yeah.
And basically everyone's competing to solve this math to prove that this new chain, or this new block in the chain has been created. And whoever wins that race gets the
coin.
reward.
Yeah.
Okay. And that reward is Bitcoin. So they get paid in Bitcoin. And that's a fixed amount. So basically, you can say, with the amount of mining that's happening, why is there not more Bitcoin being mined? Because that's in the code. So the more mining comes on, the harder the math equation gets to solve. The less miners, the easier it is, which creates a very specific amount of coins mined per block. And every 4 years, half of that gets cut. So there's even less Bitcoin to be had.
Yeah.
So value goes up.
Yes.
In simple terms, does that help you? Like, it's
no, sure. No, that's awesome. So we're running these algorithms, and I guess the nuance within that algorithm, these are people, or this is who's adjusting these algorithms? Is it individual? The code, and all baked in. So if you're a miner and you're running an algorithm, like it's adjusting, it's a constant adjusting algorithm to try to keep looking, and the computer's doing all of that, some of that. Like, what's the difference between the miners? Like, why I'm just trying to understand, like, why would you use one miner over another, for example?
You mean as an individual trying to get into mining?
Yeah, sure.
Yeah, it's all about hash rate, which is computing power.
Got it.
It's as simple as that. So the beauty about Bitcoin economics is that because the more people chase for the same dollar, it increases network power, network security automatically, right? And because basically your fixed cost is your hydro, your variable, and everything else, and the amount of supercomputing power you want to give on the network to try to compete, that's up to you to decide, right?
Yeah.
So naturally, Bitcoin, right, miners are chasing the cleanest, cheapest source of energy possible, and the actual bandwidth needed to mine is very little. So there are literally, you could go buy a hydro dam and have satellite link, and you're good to go. And by the way, I have a friend today who just signed up for Elon Musk Starlink. It's available in Canada, by the way.
No way. No.
Oh yeah, it's there. So high speed, near field satellite, and it's all here. So we can now put a supercomputer, a Bitcoin miner, whether it's a home one or a mega one that we're about to invest in. Okay.
Yeah.
You can put that anywhere as long as there's power. So hydropower, cheap power.
Yeah.
And then a satellite link, and you're in business.
Okay. Amazing.
Business. So why one over the other? It doesn't really matter. It's all about what people are looking now when they're trying to compete with when they buy miners is power, efficiency, durability. Right. So the mining economics. Right. So if I'm going it's like putting a turbo in a car that can't support turbo. It's like you'll hit turbo a few times, will blow the engine. Right. So basically, when I say performance, it's how many hash rates per second can it sustain? So it's CPU power. So when you're editing, for example, this video on your computer, you're probably hearing the computer a little louder. It probably gets a little warmer. Okay. I don't know if you edit it yourself or you send it off. Try editing a video on your computer and just listen and touch it. Imagine doing that all day long. Okay? That thing gets hot. That thing touch juice, and your off-the-shelf computer can't sustain that. So mining computers are built like F1 cars, right? Massive power, efficient, durable.
So who builds most of these computers? So who would be the leader in that space? Any ideas?
Yeah. So the ASICs. So basically, the architecture is usually the ASIC architecture, and then there's the Antminer, and there's a few others. There's about 3 or 4 companies, and then there's also Nvidia, which basically a lot of people were taking their GPU card. So they just changed the code now, which from an investor perspective, they want to make sure that they have 2 products. So Nvidia just announced in their last earnings call that their off-the-shelf graphics card is going to be the code will detect if you're trying to mine and will not give it its full performance.
Interesting.
So that you could then buy their mining equipment. So they're going to be going into the mining equipment. And then if you're buying off the shelf like GPUs at your local computer store, it's gonna have a regulator on it.
Okay. Interesting.
So Nvidia is a huge player in that.
Yeah.
Yeah.
Yeah. Okay. So now we got, so we found out, we got started.
Yeah.
Now it starts to get mined. These miners are existing, and then nothing. We get nothing happening for so many years. What's going on over that time frame? What's happening for those many years?
So actually, a lot of things are happening, right? It's
Okay.
basically the underground
Yeah.
cryptography world, open
Yeah.
source world,
Yeah.
basically people believing in the blockchain. And also a lot, so those were the first ones in. Just
Yeah.
back then, you could take an old laptop,
Yeah.
and then you start mining, and you're now part of the network. You're now helping, right? So
Okay.
they make crazy money on a laptop 10 years ago if they held their Bitcoin. It's
Sure.
completely nuts, right? So, but
Yeah.
again, as it got harder and harder, so the first people were the engineers, right, who
Yeah.
believed in the technology, and just for wanting to participate and support the project. Like for us back in the day, we would
Yeah.
invest a lot of dollars in the open source community because we believed in what it was doing, and it also returned a lot of a very big ROI for us from an engineering perspective, right? So
Sure.
so yeah, so it
Yeah.
starts off with the engineers.
Yeah.
Then the libertarians come in, people who are like, government's out to destroy everyone all the time, right?
Yeah.
So
Yeah.
then
Yeah.
they jump in because they
Yeah.
see this as like the next money. Now
Yes.
they were well ahead of their time, right? But
Sure.
back then it was like,
Yeah.
where is this going to go? So they
Yeah.
jump in, right?
Yeah. Yeah.
And all of a sudden, as they start jumping in,
Yeah.
and there's a fair amount of community around that. All of a sudden, that starts jacking up the price
Yeah.
because it's more than just miners. There's actually now some transacting going on with that,
Yeah.
right? Yeah,
Yeah. Yeah, so we had, like mining was you could get Bitcoin for pennies at a time,
yeah,
right? When we first started, and then I guess the kind of the most famous transaction was the pizza purchase, I guess.
yes, yes,
So that pizza purchase, I can't remember how many thousands of Bitcoins it was, but it was a lot, which is
yeah.
probably worth close to $1 billion today.
$1 billion, yeah,
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 yeah, yeah. So that was kind of the first where it started to where I think where people started to pay attention and said maybe this could be a currency. Is that
yeah.
right?
Yeah, so that people back then will say yes, like I was the
Yeah,
visionary, right?
yeah, yeah,
There's a lot of theories. My theory is probably like, look, there's this cool thing. It's gonna cost me a couple bucks. I get to
yeah,
play with internet money.
yeah,
Maybe throw a laptop at it and start mining. Like it's
yeah,
at that level. I don't think everyone were those level visionaries. There
yeah,
were a few though, so there
yeah,
were a few entrepreneurs in that space. So a great book to read
yeah.
would be Bitcoin Billionaires, right? So it's the
Okay.
story of the Winklevoss twins, and not
Yep.
just them, but also a lot of key people in the community. Because back then,
Yeah.
we're talking a community of less than 100 people
Yeah.
turned Bitcoin to what it was today. It just saw the vision
Yeah.
and invested in the infrastructure to make it happen.
Sure.
Right.
So
So
maybe give a quick comment on the Winklevoss twins, and maybe not everyone knows who they are, but certainly they're pretty famous.
yeah, they were. So for those of you who knew the history of Facebook, back then when it was developed in Harvard, they had the idea for a social network. They hired Zuckerberg, and then there was debate, and then Zuckerberg launched Facebook, which so they had paid him. So there was this big debate. Did they found it? Did Zuckerberg steal the code, or did he watch the movie, read the book? It's quite entertaining, but they had a
Yes.
big stigma around them, as in like the jocks, right? The guys with money, and Zuckerberg, the underground coder.
Yeah.
But this book puts them into light in terms of how brilliant visionary they actually are and how early they were in Bitcoin. And
Interesting.
they weren't the first ones. There were a lot of hackers and coders, but they became aware of that,
Yeah.
and they saw the future of this
Yeah.
because they believed in social networks. And
Yeah.
in their opinion, there is no greater social network than money.
Yeah.
So their minds were the network, so they get it, they got it.
Interesting.
Yeah,
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 yeah, yeah. So now they have a big company which we can talk about.
yeah.
Obviously, Gemini will
That's
be
huge.
yeah, something we can you can tell me about as we drive on.
Sure.
So there's some visionaries. They start to and we're starting to evolve it, and then I guess probably when would we say probably 2017, 2018, it starts to gain I guess financial interest.
Yeah. So
Yeah.
basically, all these cycles revolve around the halving. So
Okay. So
Bitcoin
yeah,
is math.
let's
Yeah.
do that.
So
Let's do
Bitcoin
that.
is math. When people say, these cycles are predictable with the halving. Now, as market cap grows, of course, not the same performance, of course.
Yeah.
But there's basically that happens every 4 years. The
Yep.
amount of new Bitcoin that could be mined gets slashed in half.
Mhm.
Right? So
Yep.
so let's put it this way, okay? Let's say, so now there's people that want to buy Bitcoin throughout all those years. And if you look at 2013, the first halving made the news, but no one really knew. But the halving initiated the
To the
spike,
left.
and then all of a
Yep.
sudden human dynamics kick in. I
Yep.
heard this thing on the news. I heard from a friend this thing called Bitcoin, so it goes parabolic.
Yeah.
Start selling, and we know how markets behave, right?
Sure.
2017, the next halving, what had happened then is now all of a sudden blockchain had evolved into a thing, and now all of a sudden infrastructure, and it became cool. So now all this money was going into new blockchain ideas, and also the idea of initial coin offering. So how can I raise capital directly from individuals, right? Through this mechanism, because it was all in the blockchain, it was all ledgered, open, and transparent. The problem is that a lot of those became scams and actually fake ICOs, right? So Bitcoin's always the leader in that. The halving generates the buzz, and then basically all this other ecosystem gets built around that. But like any boom and bust, tangible, real, powerful infrastructure gets built. In every halving, there's been powerful infrastructure that stayed, just like how all the one line hyper speed internet lines got built in the early 2000s.
Sure.
It was too early. They became the infrastructure for what we have today, right?
Yes.
So we got to look at it that way. So 2017 was probably when most individuals heard of Bitcoin. 2016, 2017, that was the second halving.
Okay.
The first halving did have the same effect, which brought more people, more investors, the Winkovai and all these other individuals. 2017 is when retail, CNBC, others are talking about it, right? ICO or blockchains, more innovation, more VC money in this space.
Yes.
Right?
Yeah.
So now we're at the most recent halving was this past May 2020.
Yeah.
So to go back in terms of what halving means is all of a sudden from one day to the next, the amount of Bitcoin that can be mined per block gets sliced in half. Okay? So right now we're at 900 a day. We were at 1800 before May.
Okay. Yeah.
So what happens here, pure economics. You and me want to buy Bitcoin. And we could go out and we go on an exchange, but the exchange you're buying from miners. So the miners are selling to exchanges. So I go on the exchange, basically I'm buying from a miner, right? So we're competing for 1800 Bitcoin, right? Now all of a sudden tomorrow we're competing for 900 Bitcoin. So there's not enough Bitcoins for us. We want to have more than 900 now. So we now have to go to the market and bid up the Bitcoin. So within one day, all of a sudden, it triggers a new cycle of value because there's less to be had. You can no longer get them from the miners. You got to get them from the open market. And when you have a lot of people who believe in something, because there's intangible, they believe, I believe there's value to this because of the network effect, because of the trust, because of its code, of its sound money perspective, and on the macro environment. I don't want to sell my Bitcoin. I'm not in this for a trade, right? For you to actually buy my Bitcoin would have to be a ridiculous number. You'd have to bid it so high for me to even let go of it, right? That's all of a sudden the halving kicks off a new cycle. And then basically as the cycle grows, it hits the news, retail comes in, and the cycle continues.
Yes. So before we go on to the next part, I do want to just ask, like, maybe your thoughts around why institutional missed this. Why institutional was kind of non-existent until really now. So like, where was the big miss? I mean, there were some obviously like Novogratz and some like investors that hit it, but why did they generally miss this? Because it's kind of like, I'd look at it as a technology. Like this is like venture capital haven.
So venture capital has not missed it. If you look at the ecosystem around crypto and around Bitcoin, VCs have been throwing a lot. Like I could show you, I could send you a chart to add it in the video somewhere, but it shows you the ecosystem. Like VCs have not missed this. They've been investing since 2015, if not earlier. Like there's lots of money around Bitcoin and the ecosystem, which is going to solve all the problems that people are predicting in terms of payments and all that stuff. So that they didn't miss it. Institutions that missed it is, let's talk about what is your definition of institution. Was like the private equity firm or
I'd
hedge
say
funds
I'd
or
say that I'd say the simple investment. So that'd be I'd say sure, private equity. We'll say institutions, pensions like OMERS, CalPERS, CPP, like Norwegian Wealth Fund, like the $1 trillion of money that buys stuff and makes them go up to Amazon type levels.
so my take on this is
Yeah.
that is because Bitcoin is a brand new asset class,
Okay.
right?
Yeah.
And whenever there's a new asset class that disrupts your world in terms of like how you do math, how you structure your portfolios, how you structure your risk, and how you structure allocation, and
Yeah.
how you evaluate securities, all of that all of
Yeah.
a sudden is no longer applicable. Some would say the current macro environment also makes that no longer applicable, but it's a brand new thing that you have to understand, right?
Yeah. Yeah.
So let's go back in time. Whenever I do my presentation, I share this. Like when
Yeah.
when the first car came out, right?
Yeah. Yeah.
You had to hire someone to walk in front of it with a red flag to say this is a dangerous thing. It's going 10 kilometers an hour. Look it up online. Today we look at this, we're like, are we ridiculous, right?
Yeah.
Like,
Yeah. Yeah.
like
Yeah.
right? The Wright brothers, they're nuts. They're going to kill themselves today. I mean, before COVID, I mean, airlines
And before the Boeing 777.
yeah,
Yeah.
before all of that. But
Yeah.
it's a
Yeah.
booming industry, right?
Yeah.
So
Yeah.
let's go
Yeah.
back into
Sure.
into an asset that people do know, stocks, right?
Yeah.
Let's go back in late 90s, early 2000s, like the sort of the creation. Yeah, there were Microsoft and Apple and all that stuff, but the creation of technology
Yeah.
as a new asset allocation part
Yeah.
of,
Yeah.
it was, you know what I mean? Like it was
Yeah,
like,
for sure.
you had banks, you had consumer discretionary, you had industrial. All of a
Industrials.
sudden,
Yeah. Yeah.
there's technology. Now it's common. You look at, technologies are baked into the predictive cycle of the economy and all that stuff. But back then, it was like it's a
Yeah.
scary thing. It's an
Yeah.
unknown thing. So
Yeah.
most asset auto killers probably also miss that.
Miss that. Yeah. Yeah. Yeah.
I mean, I was too young in the early 2000s to be an investor, but
Yeah.
I'm guessing a lot of people, a lot of institutions miss that as well. Some early adopters won big,
For sure.
probably got their face ripped off after the crash, but then
Yeah.
stuck
Yeah.
to it. Right now, today, like technology, yeah, it's a no-brainer. We need to diversify. We have a bit of techno, a bit of industrials, and we build a portfolio from there. Bitcoin is a brand new asset class, and it scares the hell out of people.
Yeah. Yeah. Yeah, I'm with you there for sure. I agree with you.
Yeah.
I mean, I think like I started in 2000, so I remember some of the early days, lots of tech momentum. Like
Yeah.
it was my first 6 months in the business. I thought this was the easiest game on the planet. But I'm with you there. I think that's interesting, and I think that is the part of me that still believes it's relatively early.
We are so early.
Yeah.
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 I don't know. I can't even reinforce how early we are in this.
Yeah.
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 In my opinion, we're circa Amazon just launched and they're selling books online and people are saying this Bezos guy is crazy.
Yeah.
Because who wants to wait a month to get their book?
Yeah.
That's how that's where we are.
Yeah.
Okay?
Yeah.
And think of the internet and the evolution that's happened on top of the internet.
Yeah.
Imagine being able to invest in the TCP/IP protocol. That's what powers all the internet, right?
Yeah.
Over IP, television over IP. That's the fundamental layer. That's what Bitcoin is to money.
Yeah.
The fundamental layer.
So maybe let's dive into that a little bit because there's the overarching feeling is that as you talk to bankers and obviously I have these continual interactions with colleagues and bankers about this is a hoax, this is a scam, this is not money, this is a pocket and tulip mania type of an endeavor. So maybe let's just think about and maybe kind of give me your comments and thinking around how does this kind of evolve, because it's money that you talk about it is, and I agree with you. But how does this evolve and how does it get used into the system? Like how do people Like you tell me you're all in. Like how in the future, so 5 years down the road, Pascal, you got $10 million in Bitcoin, but you want to go buy stuff.
Yeah.
Like how is that going to evolve? How does that look?
So there's multiple ways,
Yeah.
okay, and even today it exists.
Right.
We
Yeah.
can walk through all of those. I could tell you just today, just for fun, I took
Yeah.
a $5,000 fiat note against my crypto for 0.75% basis point interest.
Okay. Yeah.
So there are people, there are new banks being created that
Yeah.
do see crypto as an asset. Okay, so
Yep.
that's
Yep.
just one way. So now I can go spend that money, and what I did is I bought more Bitcoin. But anyways, that's irrelevant of the fact, right? Where I'm
Yeah.
going with this is let's look at gold and and Bretton Woods and anything where money was linked to gold. And I don't, we could go there forever, but
Sure.
back then gold, right,
Yeah.
was basically sound money, but it's not very divisible and it's a pain to carry around. So we
Yeah.
create paper money that's basically redeemable in its value in gold, right? So
Yeah.
so fiat money was just a technology innovation to create the exchange of gold value a little
Yeah.
easier. And the settlement process though was where a bunch of customers and you were bank A and I was bank B, and at the end of the month you call Pascal, Bank of Pascal,
Yeah.
our current account is short, you actually owe us money and we want to sell that in gold because you issued currency and I issued currency. So I would get the bank, the security guys to send you some gold and settle
Yeah.
once
Yep.
a month via gold, right?
Yeah. Yeah.
So for those people who complain that that the blockchain is too slow to process money, right?
Yeah. Yeah.
That's the settlement layer, right? I think that's the bank A and bank B once a month transporting a ton of gold because we want to settle. That's
Yes.
what that is, right?
Yeah. Yeah.
Everything else, the coffee shops, the lunches with your buddy, drinks after the hockey game. I'm talking like if this was pre-COVID, but we're going to get back there. But all the times when you spend money, the credit card, even settling a credit card trend, like when you pay by credit card,
Yeah.
the liability that takes about 4 or 5 days to settle. When I buy a stock online, like I yes, it shows like if I own it, but when you look at the settlement date, it's 2 or 3 days later.
Yeah.
That's where the brokers come. So there's this whole world called settlement that no one really is aware of how it works.
Yeah.
I don't even know how it works.
Yeah.
All I know is that there's a settlement layer
Yeah.
in money, right?
Yeah. Yeah.
So we understand that that already exists in today's world.
Yeah.
And that debunks the whole idea that Bitcoin can't be money, because how we're going to spend Bitcoin is on all the layers of innovation that are going to happen. Let's talk about a few that exist today, not
Yeah.
10 years from now, today.
Yeah.
Visa, PayPal, MasterCard's come in, and there's another one called Strike. Some people may have heard of NFL player that got paid in Bitcoin.
Yeah.
But basically, Strike is enabling the transfer of Bitcoin really, really quickly. So let's take a look at at PayPal is the easiest to understand. Okay? It's the easiest by far to understand. Cash App from Square as well. So they bought a ton of Bitcoin, okay, on Treasury, and then basically they're doing real-time conversion, fiat and Bitcoin. So you can buy Bitcoin. They're enabling that. That's one thing.
Yeah.
Let's say you buy half a Bitcoin off of PayPal. So it's still in their treasury. It's in your wallet. They're not allowing you to send it somewhere else. People need to be aware of that. So if you buy from Mogo Finance in Canada or Wealthsimple, it's on their treasury. You actually own it, but to transfer it somewhere else, you got to call their department. It's like calling my gold. No, the gold's staying in the bank. Okay. What that happens now is that go. Oh, sorry.
Yeah, just before you go on to that part versus the alternative on like a Coinbase or something, maybe tell people what that's like. Yeah.
So if I were to go buy on an actual exchange, right? It's like going to buy gold back in the day. I physically have the gold, which I could put in my vault. In our case, called cold storage. I own the asset. I can lend against the asset. It's outside of the private network. I own it.
Okay.
So you still own it in PayPal, but it's a little hard to get it out. Okay, a little hard to get it out. But what it does do, right, is, and once it comes to Canada, I will deposit some of my Bitcoin onto PayPal once this feature comes to Canada, because what it enables you to do now is to go into a store that accepts PayPal and you, and there's 300 million, merchants that allow that. So you go tap, merchant gets paid in US dollars or whatever fiat he accepts, right? And in your app, you said, I want to pay my Bitcoin. So bring it back in their treasury, pay the merchant, debit your Bitcoin, voila.
Yeah.
right? So think about this. Just like when I go to the U.S., I used to travel enough for business that I had a U.S.
Credit
card,
card. Yeah.
so that I could play forex and time when I wanted to conversion and save on conversion fees. But now I don't travel enough for that. So when I go with my Canadian Visa card into the U.S. and I for a Starbucks, right, and I look at my statement at the end of the month, Visa did the fiat conversion, took its fee off of it, right?
Yep. Yep.
And got his US
5%.
dollars, and I paid Visa back in Canadian. Yeah, exactly. Let's not talk about fees, but anyway,
Yes.
this already happens, right?
Yeah.
There's already currency conversion that takes place in the system.
Yeah. Yeah.
So
Yeah.
so that's where it's going. Now, where it's going in the future is even faster and better through innovations like the Lightning Network. It's just not going to settle on the blockchain. So what's going to happen is these large players will, like Visa that's coming into the game, and PayPal and others, will settle on the blockchain probably maybe once a week or once a day. In other words, just they will sell their current accounts, but we'll never be able to lie to each other because it is all on the blockchain. On the blockchain, we could tell that PayPal has X amount and that Square has X amount. You can't cheat the system. You just won't be settling it on the blockchain every day or every transaction.
Yeah.
Yeah.
That's fascinating. I mean, look, I can understand why the bankers are shaking in their boots.
Yes. Yes.
Right? Like this is this will change whole departments, and I mean financial institutions might not survive this if they don't adapt.
I agree, because there's already crypto banks being established today. The traditional, custody of the money, right?
Yep.
Yielding interest on your deposits, enabling you to borrow. And in this world, like in the crypto world, right, or in Bitcoin world, we're talking a world where this is not the fractional reserve system that we live in today.
Yeah.
Right? This is not like I put $10 and then the bank gives out 1,000 and then I take that 1,000 and I deposit somewhere else and I give another $1,000. For us to loan crypto to each other, it's in the blockchain. It has to exist. There's no synthetics here.
Yeah. So before we get to that part, and I think that the whole fractional banking system could be a whole presentation, a whole another hour. So we'll tuck that aside. But yeah, absolutely. Maybe before we drive on to kind of that next section, because I'm definitely interested in that, is maybe just describe that cold storage for people. So you purchase your Bitcoin and then cold storage. What does that mean?
Yeah. So people always go back to, is it crypto dangerous of lose, like, because I remember a story of this one thing where people lost their crypto, right?
Yes.
So let's go back to Mount Gox, right? That's been others, right, in the past. But basically, an exchange is essentially, I'm trying to give a really good, well, you know what? It's not a bank, but let's look at in the US, the banking system back in the Wild West, right? You had all these banks, local bank, and you'd go there to give your money, and the thing gets robbed, right? It's because it was in that local bank, or maybe the manager takes it and runs at 3 a.m. Whatever. Let's go back 300 years in the banking world. Where I'm going with this is exchanges aren't there to protect your money. They're there to allow you to transact, right?
Right.
And currently there's no FDIC or CDIC, and this is not, you're not playing games here. This is real assets, real value. So whenever you leave something in the exchange, is because you're looking to trade or make a short-term transaction, right?
Okay. Yep.
So let's say I was like physical, I go back to gold. Let's say I wanted to physically trade my gold, and I go to this Sunday flea market, it's gold transaction market, and me and Ben, and we're trying to transact, like buy my gold, and then you're trying to look at it if it's legit, and we make a deal. But I have another 15 pounds of gold that I want to sell. Am I going to leave it under my table with a sheet for the next day? No, I'm going to bring it back in my vault.
Yes.
Right? So think of an exchange like your Sunday morning gold. I'm just trying to come up with a fun analogy that people do.
No,
right?
for sure.
You wouldn't leave your gold under the table with a tarp over it, right?
Yeah.
So same thing with crypto. Do not leave your crypto on the exchange unless you want to make a transaction short term. So cold storage, all it means is that you're putting it somewhere where it's not connected to the internet. Okay.
Gotcha.
Now there are wallets now, that they're making it. They are storing it like Gemini. It's online. You send it to them. They store it in cold storage, and it's insured, which is a lot easier than my cold storage. And I'm actually legitimately talking to Gemini right now, because
Yeah.
I have enough value in Bitcoin now that my personal cold storage gets a little nervous. Like I have my own way of protecting it that's
Yeah.
disconnected.
Yeah.
It's all what's out. It's a lot of money, and,
Yeah.
and I'm starting to talk to these bigger companies that have institute grade ecosystems to protect the money versus me with my own at
Yeah.
home
Yeah.
system. Yeah.
Yeah. So who insures Gemini, for example? Who would be
So there are insurance companies that are becoming to play in that space. So Aon is one. They've insured a few in Canada as well. So look, there's they look at that technology and saying that's nearly impossible to hack. Like it's probably the safest thing to insure in the world right now is Bitcoin. Like if I'm an insurance player right now and I'm looking at, do I insure waterfront property in Florida for the next 20 years, right? Or California, or do I insure crypto?
Yeah.
I'm insuring crypto all day long.
Yeah.
Like it's in my opinion a much safer bet to not get called on an insurance claim.
Yeah, exactly. So just so I understand the structure. So cold storage, technically right now you have it on something. You have it on like a tog or a tag or something. Goes to Gemini, and cold storage is like an independent server, not part of the network. Nobody can get into it. Is that what you mean? Yeah.
The key. So right now I'm talking to go to Gemini but right now I have my own cold storage system, and that to a point where I know how to manage it and all that, but it's not different. Like I manage my parents and others. Like it's not user friendly. Gemini and others are trying to make it much more user friendly, and that's happening as we speak. And I fully trust those systems.
Yeah. Yeah. Okay. Yeah. So I mean, I think there's lots of things getting built on top of it now, and I do think, I am gonna ask you about some risks, and what you see as possible risks, obviously upside and downside risks. But first, I'd like to just continue on the evolution, I guess, a little bit. So now we're seeing that it's becoming more mainstream. Well, kind of 2008, you had to blow off top. You started to get kind of a futures market built around it, and that's volatility. Now we're back into kind of, I'd say, 2020, where you say the next halving, and it started to gain really kind of more, I'd say, more kind of institutional minds starting to think about it. And so, you've described to me where and how you can use it. The kind of the places like PayPal and Square, where it's being more usable. You can do that. Obviously, you've seen other places start to talk about that too.
I want to just pause there because it's still super early. It's like I bought a book on Amazon 20 years ago because I thought it was cool. Right? If I wanted my book this afternoon to read, I still would have went to Chapters. Right? Today, I just buy Amazon. It's like I get to stay here and it's here like same day shipping. Right? So when I go to that, it's like Visa and PayPal are enabling these things. Fast forward 5 years, 10 years from now, we're gonna be looking at this conversation as in like it's so easy to use Bitcoin. Like it's that's where we're going. And we're still early. So for people to say it's too hard to use it, first of all, I would say knock knock, don't use it.
Yes.
For the next 15 years. But anyways.
Yeah. I mean, look, it's it's one of those things, right? Too, like asset prices. People are like the investment market, which is so transfixed on every single tick, right? So I think if Bitcoin was like a house, you would easily do that. You would tuck it away for 5 years or 10 years or 15 years, and you wouldn't look at it. But because everyone looks at every tick, and we go 48,000 to 42,000 to 52 to 49, you got everyone focused on that tick.
I love this volatility. I've been studying charts for the past 15 years, right? I see volatility in every stock I've ever played with. I don't know. I don't know where. To me, this is just more of their finding an excuse to not even look at it, or to try to scare the public from going into it. But I mean, whether it's yes, TD Bank has less volatility than Tesla, right?
Yeah.
But Apple in the early days had way more volatility than it has today. So it's part of the game. I mean, in March, Apple went down 50%.
Yeah.
Great time to buy, by the way.
Yeah, exactly. It always is. I think it's that big number that really scares people. Like, I
Sure.
mean, if you think so, and I know we're getting a bit sidetracked
Well,
because
that's okay.
I want to come back to some things here. But if Bitcoin was a company,
Yeah,
if this is Amazon, for example, at some point when they approach $5,000 a share,
yeah.
they do a reverse split, bring it back
Correct.
down to $500 a share.
Correct.
and
There's
nobody
actually a
thinks.
talk. There's a
Yeah,
talk about that in the Bitcoin community
interesting.
to start promoting, because one Bitcoin is a denomination. Satoshi's is too small. There's actually a name for every, and I don't know all of them, but there's a name for every level. And some people say we should be promoting a smaller denomination because it exists, right?
Interesting.
So
Interesting.
price, so it's not a stock split because we can't split it, but we
Yeah.
should be educating and advertising to the market, the denomination that makes the brain look at this a little more in a rational way.
Yeah.
Because
Yeah.
if I told you how much a Satoshi is, you'd be like, my God, that's cheap.
Yeah. Exactly. Exactly. It's all psychological.
Yeah, yeah,
Yeah. Yeah, so I think now one thing I'd like to talk on is a little bit about what some of the corporations are doing, primarily MicroStrategy, and
yeah,
maybe kind of walk me through that a little bit, what you know about it. Obviously, we know MicroStrategy and Michael Saylor, and
yeah.
so maybe you can talk a little bit about what that meant to Bitcoin and kind of what that means now.
Sure. So like he described, and it makes a lot of sense, is you could have two big strategies, a P&L strategy or a balance sheet strategy. The P&L is how do I plug into the ecosystem? So do I accept Bitcoin? Do I innovate and create value on top of Bitcoin? That's your profit and loss, generating money from that perspective. And a lot of companies had done that before. Square and PayPal and others were plugging in their P&L to try to say how do we profit from the Bitcoin ecosystem, right?
Yep.
Miners, I would say, are the same. There's a few. There's Hut 8 that's playing the balance sheet as well, but most miners are playing the P&L sheet. Like we're going to mine, we're going
Yeah.
to sell, right?
Yeah. Yeah.
What Michael Saylor did is he just, again, he's a rocket scientist, he's an engineer, right? So I trust the billionaires and the engineers. I don't trust the bankers and the economists. So I'm this is a call option on engineers and billionaires. That's my view on Bitcoin. Besides the fact that I understand it, but I'm
Yeah.
just one person.
Yeah.
I'm banking there. But anyways, he saw what we're all seeing, the macro view,
Yep.
and especially from a balance sheet perspective, he's saying, look, we're pumping out tons of free cash flow.
Yep.
It's sitting there, right? They're not paying a dividend. They were an unknown publicly traded company until this year, right? Creating great cash, like great products. I know a lot of people use our products, so great stuff, right?
Yeah.
But it's not the sexy Apple or the sexy Tesla. But
Yep.
this guy knows his stuff, and he's a great CEO. He's been a CEO for over 25 years. He values shareholder value and his
Yep.
employees, and he's like looking at the cost of capital and the money printing, saying, if I keep this here in cash, it's going to evaporate. And I don't know where to deploy. Like the stock market, in his opinion, was overvalued. Bonds are paying negative. Like, where do I park the corporation money? Because even
Yep.
if we can't keep up, can we at least diminish the pain?
Yep.
And then Bitcoin was his solution, and in his mind, saying this is the only thing that not only can keep up, but can outpace the cost of capital.
Yep.
So he plugged his balance sheet into Bitcoin. What does that mean? It means
Yep.
he bought a whole lot of Bitcoin.
So how did he get around kind of the I guess maybe marking it? How did he get the kind of the ability to buy at that size and scale? Like how did he kind of transact it? And I think I'd like to kind of maybe segue into you can
Yeah,
talk about what you're working on, but maybe
yeah.
kind of tell me how he kind of went about that.
So when you have enough money to put into Bitcoin, all these exchanges have over-the-counter services.
Okay.
Okay, and these over-the-counter services, basically same of algorithms and systems as basically what Wall Street has when it comes to
Bonds or whatever.
well, I'm
Yeah.
not talking like I'm
Yeah,
talking the fast trading there, the
okay. Yeah, high frequency
high
trading.
frequency trading. Yes,
Yeah. Yeah.
same systems, right? So they're able to look at the spreads and look at the order sheets and make bets at a certain time. So when he's deploying $1 billion over several weeks, It's not like one market order path. It's, it's not even a limit order. It's basically going to the over-the-counter desk and saying, like, get me into the stock or get me into crypto Bitcoin over the next 2 weeks. You got a trading team and algos, buying and selling at the right time to try not to get the price to chase away from them. So that's how Tesla and everyone else is doing it. So there are means of plugging in without having a huge market order, right? In terms of how legally, right? So basically, I've done the same at a much smaller level, right? It's from a tax perspective, it's fairly simple. You just need to document your cost basis and have a corporate account with an exchange. So all these exchanges, don't open a personal account and send your corporate money there. You're asking for trouble with the CRA at some point, right? So I have a personal account with an exchange, and I have a corporate account. It's much harder to open a corporate account. They need all the legal stuff, and it's know your client, KYC, fully compliant. All my transactions are there, downloadable. It's all there, right? My accountant signed off on it. It's all there. He knows the cost basis. He could mark it. We're good to go. So if ever I sell it, or if ever someone were to recognize the value of the balance sheet, that's a different story, right? But that's there, right? So he's got his legal team, and if ever you watched his MicroStrategy World Conference, Deloitte was there, and all the guys were there explaining how they legally did it.
That's awesome.
The playbook's published.
For sure. No, I think it's it's still really misunderstood. Like it really is. And as I had a conversation with president of National Bank Financial discussing crypto and Bitcoin, and kind of from an education perspective, I pointed at MicroStrategy, like these, like the thing that I think with Michael Saylor is he really embraces that kind of libertarian type thinking, right? Like, let's put it out there, like show the world this is how we do it.
Open source and free.
Open source,
there's two things. He genuinely believes in that, right? But also it serves its purpose of getting more people on board. It's a win-win for everyone. It's a win for those who get educated. It's a win for him for being early.
For sure.
Yeah.
So listen, I could definitely go on for a lot more hours on this discussion. There's so much to know and learn, but I would like to, I think we're approaching an hour here. I would like to start to wrap up here. But what I do want you to talk about is your new venture that you're working on.
I'll gladly talk about that. And I also want to ask you, is there one question you think that you've been getting that we haven't answered? But we can go to the end, because I want to make sure. What's the one that people are asking that we didn't talk about?
The one is, before we get to that, is what's the risk? Like, what's the downside risk? I mean, we gave a lot of cases for the upside risk, but what's the downside risk?
Okay, so I'm happy. So we could talk about this for a long time. There's one video. There's a lot of great people I follow, right? I could explain it again, or I could just say, hey, Ben, add this link to your description of this somewhere in the video or in YouTube or whatever. These are legit. These are not crypto pumpers. There's people on YouTube with Red Bull and talking about let's go with the investors, the people who have been in the markets for years. These are hedge fund individuals who went to crypto. I will send you information that talks about mining risks, right? Government risks, and how to analyze all of that. And when you analyze all of that, you're like, wow, a lot of stars, complicated stars have to align that are actually go against their own self-interest to do it. So I'll send
that'd be awesome. That'd be awesome.
I'll educate your viewers a lot more than a 1 minute answer I could give.
Okay, that's good. That's
but
fair.
to me,
it's
the upside risk. Not
Exactly.
I know you got it here.
My view on the singular risk is the singular downside risk is a central bank event where they come together and ban it. And I know the argument for the other side of that, which we won't get into today, but I think that's a singular risk that could put a big pocket hole in the price temporarily. Anyways.
Agreed from that perspective. With that being said, there are a lot of governments that are pro. Let's put it this way: if the government, if the Western world decides to go there, you'll see the biggest exodus of capital and talent in the world has ever seen, and I'd be one of them.
Yeah, fair enough.
I got
Fair
yeah,
enough.
I got my
Okay.
second passport ready to go. So
That's good. Yeah, that's good. Listen, I have citizenship in Europe as well. I just haven't got a passport, but maybe it's time to go that route. Okay, so no, so obviously, as you've seen Michael Saylor and a lot of these companies go down this path and think about how they're using their capital.
yeah,
You know, we got bloated balance sheets. We got every corporation in the world right now with huge amount of cash reserves that are going. If they're earning zero, that's pretty good, but in a lot of cases they're earning less than zero,
yes,
and it's negative. So we've seen the business start to shift towards that. So I think this is part of, without putting words in your mouth, this is part of your thinking around your next venture. And so
yeah.
certainly, let's if you can tell me the name of it, which I think you mentioned was Quasar Bitcoin Fund, but
Yeah,
please
so I'll talk a
clarify.
bit about it because it all
Yeah,
came organically, and it goes
yeah,
back to my roots of like wanting to help entrepreneurs. This was all based on my network, right? And a lot of people have been coming to me to get educated around Bitcoin. And the
yeah,
major question they get is like, look, I'm not here to convince anyone. This is why we have these talks. This is why
sure,
there's tons of great education. But for those who have educated themselves on Bitcoin and are believers in its potential,
yeah,
there's still one underlying fear. I have a lot of friends and entrepreneurial friends, a lot of money saying, look, I've dabbled in it. Like I've put 5, 10 grand and I'm okay with that. I want to put a lot more. I don't know how. And I don't
right,
trust myself with, you could show me, because you could spend a Sunday with me and set it all up and show me the ledger wallet. I still don't trust myself. Right. So
yeah,
so how do I go, maybe not all in like me, but how do I go heavier, right?
yeah, yeah,
And trust the ecosystem. So if I go back to my roots of collaboration and peer groups and coming together, the concept of Quasar Bitcoin Fund is basically, look, I know from the space and the tools we've analyzed and the people I've talked to, the institutional side of Bitcoin is a completely different game. Like
yeah,
the tools, the insurance, the safety, the mining, the mining power that you get at a much cheaper price. You cannot get that at retail, right?
sure,
Just ain't gonna happen.
yeah, yeah,
That requires a lot of money to play that game. So
mhm,
Quasar Bitcoin Fund is fairly simple, is we are pooling, a bunch of us are
mhm,
pooling our resources together
yeah,
to be able to play the institutional game in a
amazing,
nutshell. And what does that
yeah,
mean?
yeah,
That means that we're getting access now to over-the-counter services. We're getting access to insured, institutional grade cold wallet. Where Gemini is like, I've at least a couple million to
yeah,
to come in. Like, don't talk to us, right? We're
right,
talking to miners, right? Where it's like,
yeah,
I could mine Bitcoin for a 70% discount today
yeah,
with institutional mining equipment. The retail guys
yeah,
are profitable now. They're going to get their face ripped off in about 6 months, right?
yeah,
They
yeah,
just can't. So
yeah,
for anyone listening to go buy a Nvidia graphic card and get their teenage son to build himself a miner,
yeah,
it's no we get rich quickly. So for
sure,
those who believe in Bitcoin
yeah,
and want to go heavier in Bitcoin but don't trust themselves or don't know how,
yeah,
we're pooling those resources together to be fully managed, fully transparent, and how we operate. It's a community type aspect. So myself and 2 other partners are going to manage it.
yeah,
We have a strategy in place,
yeah.
and right now we're pooling resources together to deploy that over the next 5 years.
So can you buy that personally and corporately? Like, will you
Yes.
be able to? Yeah.
Yeah,
Okay.
so it's going to be
Yeah.
a GPLP structure, pretty
Okay.
straightforward. So
Yep.
our vision, essentially, the pitch is
Mhm.
we're going to use the most efficient means possible to
Yep.
convert fiat to Bitcoin
Yep.
at the best price possible.
Yep.
And that requires a lot of things. It's understanding Bitcoin cycles, it's
Yep.
understanding on-chain analysis. So understanding how to read the ledger, which again, I have access to through institutional contacts. So you're seeing, is this retail coming in? Is it retail selling? Is it miner selling?
Yeah.
What wallets are going offline? This
Yeah.
creates way more predictable floors and when to
Yeah.
buy
Yep.
than any chart I've ever built in my life, because you're getting the data, right? So you get
Yeah.
all access to all of this,
Yeah.
insured everything, because we're
Interesting.
playing the institutional game.
Awesome.
Yeah.
That sounds super interesting. I think a lot of people will be interested in that. I think that is probably the thing that have kept people away. I mean, you got a guy like Michael Saylor, like yourself, who can understand everything, can do it themselves. If something breaks, they can fix it.
Yes.
Or a guy like me, or even most of the small business people that they're an expert at what they do, but you ask them to get into the weeds on something like this, and they're not willing to risk their capital
And
on it.
and this is like from actual clients and friends and engineers themselves. Like, look, I'm busy growing my own business. I don't trust myself, or I don't know how to do it.
Yeah,
Can you help? Right. And when
yeah,
there's enough of that coming in,
yeah,
it was a no brainer to try to pull. So it's not a traditional like we could talk about the
yeah,
QI3 funds and
yeah,
GP, you're just buying into a fund that owns Bitcoin, right? We're trying to
yeah,
convert fiat to Bitcoin the most efficient
yeah,
means possible to
yeah.
distribute it back to our investors.
Awesome, awesome. So definitely keep me posted on how that goes and how it goes out, and we'll be willing to put it out to our audience as well. And so
Excellent.
certainly keep me posted on that.
I will.
Um, and I think that we should leave it there for now. Like I
Fair enough.
got 25 more questions that we could go through that we didn't even touch yet.
Happy to do a volume 2 if you need to. But
Okay,
anyway,
yeah, that'd be awesome if you're up for that.
yeah,
So
absolutely.
yeah, so I really appreciate your time and doing this and spending so much time with me. I know my audience is really going to appreciate this because you hit a lot of information, a lot of questions that I get, and this is going to help a lot. So I really appreciate your time, Pascal.
Happy to help, and I'll send you all those additional resources. We're all about
Nice.
educating, the people about this. So
Fantastic. Well,
perfect.
good luck as well on the new venture. Good luck on everything that you're doing. Let me know if there's anything I can do to help you as well, and I'll bid you adieu. Ha-
All right.
Have a nice evening.
Take care.
Yeah,
There we go.
good. All right, I'm just gonna stop.